please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, that really is the breaking news happening on your screens right now. We have heard the final fourth OPEC and the non-allies meeting press conference as well. And we have heard what the Russian oil minister really had to say. He clearly is speaking the language that was spoken in the OPEC members yesterday. We have seen all the 24 members be part of the meeting today. This has been the fourth ministerial meeting, really. And what we have really heard is the Russian oil minister saying that the cooperation that began in November 2016 is something that they are looking to institutionalize, and that is something that they would want to carry forward from here as well, even as they would phase out much of that agreement output quota that they are working with right now. It was very important that the OPEC members, when they reached a decision yesterday, that the non-OPEC or the allies of the OPEC do come out and stamp on that. And that's exactly what we have seen coming in right now. So Russian minister has said that as of now, it is acceptable to them that 1 million barrel of an increase in supplies is something that they will go through. It also is important to take the cognizance of numbers, because in the month of May, we have seen the OPEC compliance, or rather over-compliance, happen at 154%, and the non-OPEC compliance was at 54%. So what we really need to see here is that there is some kind of a balance that we see coming in here, and the OPEC countries really will have to bring this compliance up to 100%, and that would mean increasing supplies by nearly 1 million barrels. That actually is 1% of the global supplies, which stand at 98 million barrels per day at this point in time. Also important to know is that in 2019, there's an expectation from IEA that we will see the global demand stand at 100 million barrels. The second half of 2018 also is quite important, because the markets are anticipating an increase in demand, and that is what OPEC actually is looking to fill that gap in. Joining us on the show now is Ms. Win Mahesh. Ms. Win, hi. Third consecutive day of meetings happening in Vienna. Today, of course, was the most important, because what OPEC did yesterday, it was important that the allies accepted to that. They were on the same page for that. And we have seen that happen, actually. What is your take now? What is your expectation of an actual increase in supplies that we might see happening from 1st of July itself?
Yeah, so I think OPEC yesterday had to sort of balance the needs of Iran and Venezuela on one side, the Saudis on the other side, and the rest of the members. It's very likely that the Saudis will sort of deliver in terms of at least getting the whole OPEC target at least about 700,000 barrels per day. And then the extra bit would be supplied by Russia as well. So totally, I wouldn't be surprised if we don't get 1 million barrels per day. One thing I'd say is OPEC might be disappointed with the fact that prices rallied on the back of their decision, rather than sort of prices fall, which was what the U.S. wanted. So we might start to get a lot of globe earnings from Saudi Arabia in particular if prices do start getting close to $80 a barrel again.
But what is your sense really on the fact that there could be a 1 million barrels per day of a supply increase? Because the various countries, as they have been commenting on this deal, we do understand Iran says that it could perhaps be like 5 lakh barrels of an increase. Nigeria has a different take. You also are looking at Venezuela coming out with their own numbers. So the expectation really is that we may not see that many barrels in actual coming in on ground.
Yeah, so Manish, I think that's where OPEC was very good yesterday in terms of saying they've collectively agreed to pump 1 million barrels per day. So even if some of these countries that you mentioned don't actually pump the extra barrels, for instance, Iran and Venezuela are very much constrained at this stage, it's likely that the other members like Kuwait, UAE, and Saudi Arabia, they'll sort of fill in because it's a collective thing that they've agreed to. In terms of balances, though, I think 1 million barrels per day is not enough to prevent stock draws, because some quarters we're still looking at 1.2, 1.3 million barrels per day of a deficit. But it'll definitely help cap prices below $80 a barrel, which is what OPEC's aim is. But again, it comes with a lot of caveats.
It sure does, Ms. Win. But also, what's your sense on the way the prices really have reacted? Because, you know, yesterday we've seen the Brent prices and the U.S. crude gain up by 3 to 4% before the markets actually closed for the week. How have you read into that? Would you say that this perhaps is a knee-jerk reaction? And how do you see the Monday markets open now?
Yeah, so two things here, Manisha. One is in terms of what Saudi's objective was going into this meeting, they sort of aimed for prices to be below 75, and clearly we've settled above it. From that perspective alone, I'd say OPEC's sort of job has sort of confused markets, given how vague their statement was yesterday. They didn't give actual numbers, and that's part of the reason why the market took it as a bullish signal that we could expect lower barrels than the 1 million barrels per day. The second thing I'd say is over the coming weeks, historically, whenever OPEC's sort of raised production, we've actually seen prices increase because it's a demand-led market at the moment, as much as the supply deficit is there. And as the Saudis said yesterday, those barrels that they get released in July, post-tanker sailing times, etc., they only reach the market by mid-July, August. So there is a bit of a window there where prices could still rally before they start stabilizing with the extra barrels that are coming from OPEC.
Oh, well, absolutely. That is something to keep an eye on. But, Ms. Wynn, stay on with us. Mark Tu of Wing Fung Financials as well joins us to talk about the same now. Mark, hi. The markets have been very keenly waiting for the third and the final meeting to get over in Vienna. And this is an event that we have been waiting for last 2-3 months and more. Has been an important one for all asset classes, the producer countries and the consumer countries as well. And with the kind of reaction that we have seen come in for the crude oil prices, what is your sense? Would you say that a near-term bottom perhaps in the crude oil prices has been made?
Yes, thanks for having me. I think the overall situation at least is finalized, and as you said, it comes to a conclusion at least. I think the whole thing. I think the supply demand condition will be more clear, and for investors, retail institutionals alike, I think the situation will be clearer, and hence the uncertainties around it will be reduced. And I think the price momentums will be with us again. I tend to think that the overall situation for the medium to long term should be a little bit more optimistic than people may like to read into the decision, because we can see that it would be strategically in the interest of different producers, or in the overall situation for even for the economy of the United States and otherwise to have a higher price. And actually, it is the higher price for the last few quarters that somehow induce the increase in production, or induce in the difference in the decision of the OPEC. So overall speaking, I tend to be a little bit more than optimistic.
Mark, I also want to come to you with another thing, and this really is about Russia, really. And they had asked for 1.5 million barrels per day of an increase. A lot of Russian state companies have been pushing for higher production. They have been preparing for that, starting right from Rosneft to Saudi Aramco, etc. How would you read into 1 million barrels per day right now? And what is your sense? I mean, of course, Russia staying on into the deal is a big one. But the compliance that we have seen come in from the non-OPEC allies, do you see that improving going forward as well?
Yes, somehow you can see that all parties involved, whether OPEC or non-OPEC, they have to coordinate to maintain some kind of equilibrium, or you may say some kind of balance of power in the production side of crude oil. I think at least in this sense, the whole thing is good for the people involved. So after the decision, while there might be some kind of volatility increasing, we can still see that the supply-demand condition, as I mentioned before, are clearer, and that means at least for the direction or for the price momentum should be with us again.
Mark, also, what is your sense on the prices moving forward from here? Because there have been various reports on how we are looking at a strong demand going forward. There is the U.S. summer season demand. There is a hurricane season coming forth as well. And we already have seen reports from Goldman Sachs and the like saying that we perhaps could be looking at $82 per barrel of crude oil prices coming back in this summer itself. Are you equally bullish?
Maybe even more bullish than this, because I read into the medium to long-term strategic interest for the people involved, for the United States or for Middle East, for all people involved to have higher prices. And that's why I think for at least for NYMEX crude oil, I think 82 is not a problem. And I think for the traders, at least for the past few weeks, I think for the past weeks, we have been paving road. We have the corrections in prices. We have at least some kind of you can see that we have made room for the adjustment. So actually, whether the OPEC decision is significant, we can still see that the price. I tend to think that it is going to be going up.
Mark, what's your sense when Russia says that this cooperation with OPEC actually could become permanent? What would that really mean? Would you say OPEC as a cartel, as we saw it a couple of decades back, would actually becoming more powerful, even as U.S. is trying to take that space or place?
In a sense, yes and no. In a sense, we can see that it might be that OPEC is having the upper hand, but you can see that it might be in the interest of everybody to get involved, that's getting involved, to have some kind of coordination to maintain the status quo or to have equilibrium, so that the interest is maximized, subject to constraints, subject to different kinds of constraints. So after all, the decision, whether you see it at first sight, it might look like that some people have taken advantage of the other, but I tend to think that it is in interest for people to have that kind of negotiation, to have a longer than expected interest involved. So I think everybody is a winner, no loser.
Stay on, gentlemen, with us. We also are joined by Peter McQuire. Now, Peter, hi. You are in Vienna. You've been there for the last 3 or 4 days now. What is the sense that you have been picking up in sense of OPEC, the body language, and the kind of agreement that they have finally reached into? How sustainable does that look to you?
Well, I think when you look at it, Manisha, it's quite simple. There's been a level of coordination across all of the members and the non-members. 24 nations. I'm noticing, how Russia's positioned itself, and certainly it seems to be a very concerted effort to look at the production side, understanding where Iran sits in Venezuela, and more importantly, as a cohesive unit. And there is no doubting that I think moving forward, they will remain with that consideration as far as Russia being there. And that's the big picture. I think that OPEC, a couple of years ago, you may have said it's getting weaker. I think from now moving forward, it looks like it's getting a stronger unit, a stronger body, and a stronger cartel.
Well, that, of course, is the initial comment coming in from all our guests there, but we do need to take a very short break at this point in time. The final agreement has been now stamped by all 24 oil producers, is what we understand. Today was, of course, the most important meeting, because what OPEC agreed on yesterday has been stamped upon and agreed by the non-OPEC countries, which also are other 14. But we will go for a very short break, come back and tell you what this really means for the rest of 2018 in sense of demand, supply, and the global prices on where you can expect them. Welcome back. Well, we are discussing the breaking news with you, where the final and the third day of the meetings in Vienna have concluded, and all the 24 oil producers are on the same page, including Russia, which is the top producer in the world, saying that they are willing to increase 1 million barrels per day, even as they wanted 1.5 as the number to come in. But Peter, coming back to you really, the next meeting now would be on December 3rd, is what the OPEC tells us. With this major event out of the way, what is your sense? Will the markets now start looking at the global demand-supply picture yet again? Because as far as the supplies go, there is still a bit of a concern, especially given the fact that the global trade relations between the two major economies are clearly a view of uncertainty there.
Well, that's exactly right, Manisha. I mean, when you look at it from a geopolitical side, there is certainly so much uncertainty, and that really captures, the Iran, Venezuela, and the US picture, the trade talks and the sanctions, and of course what's going on with President Trump in China. So you wrap it all together. Then you look at the refinery outages over this normal, May to June, July period, and then you're dealing with Mother Nature with hurricanes for the shale side. I think there's going to be probably, as far as price, some whipsawing. You'll see some profit taking, but it's had a nice move up, and naturally what we saw in New York trade overnight. And where it moves for Monday and Tuesday will be quite fascinating. I think it'll probably settle down a little bit, but I think it'll edge higher over the next month or so.
And what, Peter, are you expecting a reaction coming in from the US president now? Because he's been asking OPEC members as well to increase production. Will 1 million barrel per day of an increase really fit that bill?
I think he wanted more. There's no doubting that. But he also understands, as far as if you look at US shale, it's about max capacity, they're saying, for the next 12 months. There's pipeline issues there on the Permian Basin. So, whilst the US has had dramatic growth, there probably will be more rigs coming online for the shale side of things, leading into Q3, Q4 of 18. And while prices remain high, there's naturally going to be more operators coming to line. So I think leading up to the next meeting, it's a sense of goodwill. It's a sense of that things are far more positive than they were 12 or 18 months ago. And where price goes, probably going to edge up higher. Manisha, I think they edge up higher from here.
Well, yes. I really want to come to each of you now to get your comments on, from here on, what is that thing that you would want to watch in case of crude oil in sense of prices, and also where do you see the prices for the rest of 2018? Ms. Wynn, I would want to begin with you now. For the next 6 months now, for the crude oil, as an investor, as a trader, as an economy watcher, what is it that you would want to watch in for crude oil prices, as in sense of fundamentals, and where do you see the prices headed or ranged for the rest of this year?
Yeah, so I'd start with monitoring demand, because that's the key concern our clients have at the moment as well, because the whole story of synchronized economic growth, etc., is falling apart. Emerging markets aren't doing as well, and the high price is also an issue for oil demand, and we're increasingly starting to see preliminary data starting to weaken. So I'd say the key thing to look at now would be the demand side, and in terms of how OPEC is increasing production. U.S. supply growth is constrained because of the infrastructure issues there, so that's very much a given. So I'd still say it's the macro economy that's really worrying me at this stage. In terms of prices, I'd say politically there's an interest to keep prices below $80 a barrel going into the U.S. midterm elections. Key consumers such as India, where the oil minister has made specific requests as well to OPEC, given the sensitivities. I think the consumer pain band is being touched at $80 a barrel, and OPEC's going to try keeping the prices below that, at least for the next 6 months. So I'd say a price roughly around $70 a barrel would be a fair price for the next 6 months.
All right. A fair price in crude oil is something that we always keep finding, though, Ms. Wynn. But Mark, coming to you as well with the same question, what would you want to watch out for crude now? Because clearly a lot of consumer countries like China, India, Japan, etc., wouldn't be very happy with the kind of supply increase that we have seen come in from OPEC, because the expectation has been higher. We've been asking for more stability here. What would you want to watch on from here on? And also, what is your price range for the rest of this year?
Yes, for the coming 6 months horizon, I think the most important thing that I will pay attention to is the macroeconomic equilibrium, especially given the constraint of the global trade war concerns, because you can see that it might affect the demand side. But also we have to look at the equation from the monetary policy changes, especially the Fed is going to have a more the faster than expected inflation interest rate hikes, I think it is very important for attracting the money flows back into America. So the overall situation should be better for different countries in the world if the production of the crude oil is a little bit moving up, and I think that it might lessen the pain for different countries, emerging economies, as well as the others. I think it is good for the equilibrium, at least for the moment. But overall speaking, the nominal production amount for according to the OPEC agreement, I think it is one thing. It is the enforcement or the execution that matters in any kind of a similar situation from the context of a game theoretic analysis. So at this moment, I think the overall situation is a little bit better than expected.
Well, that really is the view coming in from all our experts, that what the OPEC and the allies have done is, of course, stayed on the same page, stays on the same course and direction, and the prices from here on perhaps will see more consolidation. What we still are missing in the meeting yesterday and today, of course, has been the fact that how much will each country produce? Is there a quota being changed for the OPEC and the allies? Those finer details, of course, haven't really emerged yesterday or even today. But before we end the show, thank you, gentlemen, so much for giving your opinion, etc. to us. Before we let you go, let's hear on what the Russian minister and the final meeting today had to be said in sense of excerpts.
In the current market conditions, I think it's of utmost importance that we show the market that we are ready to once again take decisive action, but also one which answers the needs of the market at the current moment. Keeping this in mind, I believe that it is a very timely and a right recommendation by the JMMC, which was voiced 2 days ago, and that is increasing production by OPEC plus countries by 1 million barrels in total, splitting this pro rata. I think current market dynamics, supply and demand balance have made this decision ripe, and this decision would help support the balance which we currently see.